Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Good morning, good afternoon. Hope you are doing well wherever you are in the world. We're back taking a look at more markets as we do each and every day on this stream. If you're new, do me a big favor, hit the thumbs up button, subscribe, all that good stuff. Say hello. We've got 150 people joining so far on the call. Give everybody just a second before we get too in depth with charts. Hey, Nick, I'm an EdgeFinder user. How would you use the tool for trading intraday trading sessions? So for intraday trading with the EdgeFinder, yeah, we get that question a lot. How do you use it for different time frames? So the EdgeFinder is not specific to a time frame. Like we have traders who use it on the 5-minute chart, and we see traders using it on the weekly chart. The EdgeFinder simply does a very specific task. It pulls in a ton of data in regards to sentiment data, technical data, and economic data. These, by their very nature, minus the technical side, I'll tell you that in just a second, sentiment and economic data, these things are not necessarily time sensitive whatsoever. Like when you're looking at a positioning in a market, that's not telling you, oh, in the next 10 minutes it's going to reverse, or in the next 10 weeks it's going to reverse. It's just telling you in general what positioning is currently doing. So if you're an intraday trader using the EdgeFinder, check out some of these top setups pages that might suit you pretty well. So for example, you can actually look at, if you're an intraday trader and you want to just look at sentiment, right? You could go to the top setups sentiment only tab. Now what this does is it shows you only the commitment of traders bias, retail positioning, put to call ratio, and the AAII investor sentiment survey. Why this might be helpful to you as an intraday trader is because if you're like, I'm not looking for longer term fundamental trends or something like that, you could pay close attention to the ones that are getting strong sentiment scores, which isolates just specific components of the EdgeFinder's scoring algorithm. Alternatively, if you're just looking for a general fundamental direction, even if you're a day trader, this is still useful. We could look at the economic only tab. We could take a look at growth, inflation, and labor statistics, and we get an idea of which currency pairs, commodities, indices look strong or weak, and we can use that still on the intraday level. You still got to find your trading setup. You still have to look for the technical moves that you're looking for, but you can overlay the top setups economic only page. Now, why did we build these specific variations of the top setups algorithm? Well, the reason is because not everyone wants all of the scores. And again, the EdgeFinder, like I said, it's not an out-of-the-box make you profitable system. It is a market screening software. So when we're looking at the EdgeFinder, right, some people are like, I don't really care to have the technical trend and seasonality stuff in my bias. I really only want the economic data. We get other customers who say they only want the sentiment data. We have some people who want all of it. So what we've done as a team is we're like, okay, that's what people want. They want to be able to split this up however they want to use it. That's our job here at A1 is we're like, okay, let's build this thing to do however people want it to do. So there's your answer. I hope that was helpful. Pretty much you can use the EdgeFinder in many different ways. Intraday traders, swing traders, scalpers, position traders. We have many different styles of traders using the EdgeFinder. There is not it's not like, oh, it's built for day traders or it's built for swing traders. It's built for just traders who want to look at lots of data. I've also got the stock box. I was playing around with the stock box here recently. Got some cool stuff I've been playing with on this side of things. For example, well, it's not going to work, of course, when I pull it up, but it was working yesterday. We were working on a market breadth indicator, which has decided it doesn't want to work today. But we've been building all sorts of stuff. Market breadth indicator is a really cool one. It basically shows you how many stocks are actually doing well under the hood rather than just looking at the index level. You can look at specific things. Other thing that I really like within the stock box is the macro scoring for top sectors. So like currently real estate's getting a really strong bid. Energy is looking really strong. Actually, what is energy? What are energy stocks up to these days? Energy stocks looking a little underperforming here recently. Speaking of indices, not a whole lot of motion here. We've seen volatility really dry up here. Now, again, a couple weeks ago, you had huge volatility. A lot of people expecting really big moves. That's pretty much what this chart is telling you. The volatility index dramatically pushed higher during all of the tariff uncertainty stuff. We've now seen a whole lot of 90-day pauses and, kind of a relaxation, if you will, of all of the tension that was. Doesn't mean it's all over, but for now, everybody's kind of on pause, and seems like there's some willingness on both sides, of each of the negotiations for the most part to negotiate and to find something that works for both parties. And I think that position, that stance, makes me feel a lot more comfortable about how things are going to shake up. So the VIX dropped dramatically, and I actually think that on a longer term basis, you may be getting into a point where the VIX is like undervalued, like volatility. I think is likely to actually be higher than an 18 VIX going forward. I wouldn't be surprised if we did see, a spike up in the VIX, and maybe not to the severity that we saw up to a 60 VIX, but I do think that, you've had this really good stretch here in the market. You've had just a pretty much one shot drift higher, and it's not only drifting higher, but it's slowing down. That is like the quintessential example of like you're back in bull market territory, is when you get, these violent sharp moves up. That's usually a bear market bounce. But then what's actually taking place that's super, super interesting is you're now seeing the grindy bullish uptrend resume that we saw for quite some time over here, right? This grindy uptrend, what it tends to do is it tends to keep grinding higher. And that can be very painful if you're a bear and you're like, oh, this thing's got to drop. Well, it can grind on. I remember back in 2017, that was the year I remember just watching the thing go grindy up for an entire year. It was crazy. Am I thinking that correctly? Yeah. Look at this, guys. So this is 2017. Imagine being a bear in 2017. Like how frustrating that would have been. If you were somebody who was bearish on the market, this is 2017. For an entire year, the market essentially grinded slowly higher, just creeped higher and higher and higher. You finally did get a drop in 2018. And guess what that was about? What was, it was really the end of 2018 where things, pretty much 2018 was like a volatile year. So we went from like super low volatility, super chill, relaxed market to freaking out year in 2018. You know what this was about right here? This was about trade stuff. It was Trump's trade war 1.0. And look at this. You know what's so fascinating about this? Like the market, I'm telling you, it like plays games on people. The market for the S&P, for the NASDAQ dropped about 24.5% in the last Trump trade war. And that was it. That was the bottom. It ripped from there for a couple of years before we hit COVID. So this is Trump's trade war 1.0. And what just happened is something like the market just loves to play games with people. What do we see in the NASDAQ? About the exact same, 26% down. So the first we were down 24.5 on the NASDAQ. That was the first one. The second one, 26.5, let's call it. So we pretty much had the exact same thing happen in terms of a price action standpoint with the two trade wars. That doesn't mean that it's all good from here, but like the market is telling you it's feeling a whole lot more optimistic about trade dynamics. Now, you might disagree with that. You might say, I actually don't think that we're going to see trade smoothing out. But we have a track record here. 2018, the market bounced back and ripped higher for, a long time before 2020. So, I said it over here. I still think it. I think we have bottomed on this. I would be very, very surprised if we did take out those lows. It could happen, but I'm telling you that I think most likely it's not going to happen. It could. So I'm not saying, oh, it can never happen. That's ridiculous. I'm just saying that most likely a lot of the worst case scenario fears are no longer a valid concern, right? China and the US seem pretty adamant that they want to make a deal. They just might need to hash out the specifics. That's different than both countries just saying we're not going to negotiate. That's different, right? That is a way more scary environment than, hey, let's just pause and we'll hash out the details. We might agree on some, we might disagree on some, but we'll figure something out. That's very, very positive compared to the dynamic that we saw over here. So that's the NASDAQ. I think that it, in my opinion, should continue to drift higher. I'd be looking for a pullback. I really can't justify chasing at this point. If we do get a couple days or a week down, that'd be great. That'd be an opportunity, in my view, to get long on the NASDAQ. By the way, if you guys are not already in the Telegram channel, it's completely free to join. And check this out, guys. We got some bonus content yesterday. This is actually from Alan, who is our new market analyst. You guys may know him on the stream. He comes on and he shares his commentary. He's also going to be doing some commentary in our Telegram channel completely for free. I'm also, of course, sharing mine here. By the way, there's a picture of Alan and I together. And there's Alan, right? So we're sharing all sorts of stuff. If you're not already in the Telegram channel, take a second. It's completely free to join. We just dropped the link in the chat. It should also be in the description. But we post several chart markups per day, just trying to help people out and sharing some stuff that we're seeing in the markets. But look at this write-up. I mean, this is a phenomenal write-up that he did on Euro Dollar. He also did one on Dollar Swiss. Yesterday, I did one on gold, and I did on an unemployment rate write-up, and then the dollar. So we're pumping it out there. If you'd like to get access to that stuff for free, the link is in the chat. You can click it there. So let's take a look at some stuff here. In terms of, I think we had some CAD inflation numbers this morning. Is that right? Must have been a hot CPI print for Canada. Just pull this up. Yep, higher than expected inflation in Canada. You could see a 3.2 versus 2.9% and a 3.1 versus 2.8%. So we've got stronger or higher inflation out of Canada than expected. It's good for my CAD Swiss long positions. We'll take that. I'm long CAD Swiss dollar cost averaging approach on this one. Still sitting in some drawdown, but just waiting this one out. I do believe that the Canadian dollar has the potential to continue to rebound in the event that you see trade dynamics clear up. Part of the reason I like the Canadian dollar is also because I like oil, right? So the two tend to move, not always, but tend to move in sync to a degree. And so what we see here is oil, in my view, has room to continue to break out. We're not there yet. I'd like to see this thing break through resistance, but I'd be looking for longs past the 64 level is an area that I'm watching personally. Part of the reason I like oil, actually, we can just do a commodity scan really quick, just understand the concept here on oil. So we're looking at oil's overall score on the EdgeFinder. And what we can see here is a lot of our score is coming from seasonality, right? So seasonally, it is a strong period of the year for oil prices. PMIs out of the United States were stronger than expected. Services PMIs stronger than expected. Retail sales stronger than expected. NFP was stronger than expected. Inflation numbers were weaker than expected, or softer than expected, which is not a positive catalyst for oil. That is a negative catalyst for oil prices, simply because commodity prices do tend to rise and fall with inflation. GDP growth also missed expectations in the US. So that is a softer print for oil. So there are some negatives here for oil, but the majority of our indications here on the fundamental analysis and sentiment analysis side of things do favor oil bullishness. That is why you're getting the +8 score and bullish bias within the EdgeFinder. So when I look at oil, I do like it to the upside, but I don't love the technicals, right? Notably, also the stock box is getting energy as one of the top sectors potentially going forward based on the macro. So I like that confluence. We're seeing energy stocks as well as commodities, as well as the Canadian dollar. I like that kind of group, and definitely going to watch this close for a breakout. By the way, I'll do some questions towards the end of the stream. If you have not already dropped a question, you would like to drop one, the best way to do it is to drop the question in our form that we're about to drop here in the chat. The reason we do it through a form is because the chat kind of moves up and I miss questions very often. So if you really have a great question for the stream and you'd like me to answer it, I will do my best to answer your questions if you submit it through this form that just got dropped in the live stream chat. It can also be found in the description of the live stream if that's easier for you. 1 to 2% per month. I'm a swing trader, so I take around 1 to 4 trades per month. Anthony, I love that. That is pretty similar to my style. I think I trade a little bit more than 1 to 4 per month. I usually would say like 4 minimum. Like it'd be a very quiet month if I only took 4 trades. But hey, if you have high convicted trades and you only have to take a couple per month, more power to you. That's less commissions and stuff you got to pay to the broker. So less is more in trading for sure. Let's take a look at gold here. Gold still sitting at this resistance point. I did a chart markup on gold earlier. Just a quick reminder, if you didn't hear me already on this, Telegram channel is completely free to join. Make sure to do so. I did a chart markup on gold yesterday. I'm probably going to be a little bit more heavy on so Alan is our new analyst within the group. He shares a lot of FX related stuff, which is great because I'm a little bit more oriented towards the commodities and indices side of things. So with the two of us in the group, I think you're going to get some really great value if you join the Telegram. So we're at resistance for gold, and specifically on the 4-hour chart, you can see it a little cleaner. Gold has been anybody. Let me ask you guys this: if you're a gold trader, especially if you're like an intraday trader, have the last few days been kind of frustrating? I'm just curious. Type yes if that's you. I'm not an intraday trader, but gold has been kind of frustrating even from a swing trading perspective to watch because we're just kind of sitting here. We're sitting in consolidation. And I think that this really is a tough when you get this move, right? This is hard for a lot of trading, myself included. Like I don't like that type of trading. If I'm trading a momentum breakout style, like I want these moves, right? I want these moves, but these moves, those stink. So I don't know if anybody else, if anybody else feels a little frustrated by it, but yes, Bashi says the lower time frames are a little bit more clear. Yeah, there's your 15-minute chart. You've had some moves here, moves here. Yeah, if you're looking at like the 4-hour chart like me or the daily chart, this is kind of a choppy mess, at least for now. I think if you're looking higher time frame, the daily chart is still in an overall upward trend, but we are really at a decision point, guys. For everybody who watches gold, I'd suggest just marking up on your chart the 3250 level, which is right here, where you can see, I know it's kind of hard to see here. Let's go to the 4-hour. Look at the 3250. Like, look how perfect price is reacting. 3250. 3250, 3250, 3250. It is like just tagging that level and sitting at it. It's not going too far in either direction. Now, the reason I bring that up is that 3250 on the daily chart is also interesting because that was where we pivoted and went higher, but did not make a higher high. We kind of double topped at this 3430 level, let's call it. Now I've come back and are now sitting on the underside of that 3250, what was support, now resistance level. But let's think about price action for a second and say, what is this telling you? What is price sitting at that level telling you? It's not like we said, okay, hey, we've come down, we broke clearly under that level and we retested it and we didn't reject it and go lower. So the bears are not strong here, but are the bulls strong here? Kind of not. Bulls didn't decisively take this level back either. So we're just literally sitting in consolidation. We are just sitting in no man's land. Bulls aren't really in control. Bears aren't really in control. So I think that that's okay to acknowledge. If you're somebody who trades this, like, be careful. Don't get chopped up for no reason. If you're just in here, in, out in terms of trades, right? Then you've got some, your cost of doing business, your broker fees are going up, but nothing's really happening. So the way I look at this, right, is I can only share with you guys what I do, right? That's all I can do. I can give you the technical analysis, which is applicable to most traders here that I have, but really this is where it's going to define if I'm going to take trades, these two right here. Let's do a quick breakdown. Fundamentally, how are we looking for gold? Well, let's pull it up. We've got a software that does this. Why not use it? It's a chop fest here too. Coincidence? I don't know. I would say maybe not. Let's just really quick. Why is this mixed for gold? Why is gold getting a -2, which is pretty much a neutral score within the EdgeFinder? Well, seasonality suggests this is a good time of year. But what else? Okay, GDP growth missed. That's positive for gold. Hey, if the US economy is slowing a little bit, maybe want to get in gold. Oh, but wait a second. No, PMIs actually suggest that going forward, we should see strength in the US economy. That is a bearish catalyst for gold. Retail sales, the consumer actually did a little bit better than people thought it would. That's a bearish catalyst for gold. Those are security factors. Economy's doing okay. But wait a second. Inflation's come down. That's good for gold. Lower inflation, Fed's going to cut rates. Fed rate cuts are almost always bullish for gold. But then NFP was strong. Jobs are secure relative to forecasts. Unemployment rate's still at 4.2%. Do you see where I'm going with this? You wonder, why is gold choppy? Well, the answers are in the fundamentals. There's a mixed bag here, right? So what this means is, everybody's looking for, on social media, on YouTube, on Twitter, on Telegram, Discord, everybody is looking for that. Give me that strategy. Tell me, like, should I buy? Should I sell? Everybody's so focused on should I buy? Should I sell? But more people should be focused on, is there even a reason to be buying or selling at all? For me, the answer is no. There's nothing here on gold right now, according to my own rule set. You might have a different rule set. I'm not telling you like, oh, there's never a trade here. There's no reason. I'm just telling you, for me, right? I just checked my checklist of fundamental analysis stuff, and it told me way too mixed here. Like, I can't tell you if I think it's going up or if I think it's going down. I think it's going, I don't know. I don't know where it's going, sideways. So why on earth would I trade that if I don't have any clear bias? So fundamentals are just too neutral for me to take any trades. Let me know real quick. Just type yes in the chat if this made sense. If that breakdown on like why I just said fundamentals are choppy, right? Everyone's looking at the price action, but fundamentals told you choppiness for a minute now before the choppiness happened, right? Fundamentals back here, I was saying, hey, I don't trust the breakout. And when we had this red day and we kept going down, I don't necessarily think gold should go way down either, but I don't see gold should go way up. I really think what I could do you know what I would do if I had to take a position? You know what I would do? Nick, you have to take a position on gold. You know what I would do? I would sell a call and I would sell a put. And I would say, I don't think it's going to go below this level, and I don't think it's going to go above this level. In options world, that is called selling A. Anybody know what it is? Does anybody know? Do we have any options traders in the room? What is this called? Show off for a second if you know it. What option strategy is this called when you sell a put and sell a call at the same time? Anybody know? A spread? Close. Strangle. Correct. That is called a strangle. Iron condor, Sebastian, you're close with this. An iron condor, I remember when I first heard about these things, I was like, you sound like an insane man. What the heck is an iron condor? All an iron condor is you're selling a put, but also buying another put lower to have a max risk to your trade. Like you're capping your downside. So you can sell a call and also buy a call, right? So you buy a call and sell a call, and the net result is you make more money, or you collect a positive credit. But yeah, anyways, we're not going to go into that too much because it's not a straddle. Straddle would be if you were to sell a call and sell a put at current price levels. That's a fun one too. I personally like to do strangles, and I may actually even look into if I could get some good premium for selling a strangle on gold right now. Like I really think that the price action is too neutral. The fundamentals are too neutral. In fact, that may actually be a trade that I place on gold today. I'm going to look at it. I'm going to look at a strangle for gold. I'll trade GLD, which is an ETF. And basically, I would look at saying, I don't think it's going to go beyond this level, 316 or so. And maybe equal distance. I don't think it's going to go down. So that's, let's say, $18 up or $18 down on GLD, 280. So 280 and 316, that might be a longer term, like a 2 or 3 months out even, strangle that I sell on gold. Anyways, I'm going to try and avoid that topic. I love options, but my audience, like I know some of you guys might like it, and I'm not saying you don't, but I look at the analytics and most people are not super interested when I talk about options. So let me not bore everyone. But low key, if you know, you know, and I love options. So has really helped to smoothen out my equity curve over time. Anyways, I asked you guys to drop some questions. The form here is right here if you'd like to fill it out. I'll take a look at those in just a second. If James or Chandler, you guys want to just proofread them, just make sure we don't have anything profane in there. I'll pull that up in just a minute or so. So yeah, I think really it's fair to say, like, this is a fair thing to say. I don't think gold is going to decisively move this way or decisively move this way in the short term. I think most likely the scenario that I think is likely for gold is to do this and just chop everybody out. Some crazy information. Thanks, Nick. Hope it was not too confusing. I like it, Nick, but I don't understand it much. Bashi, it's the thing that is so fun about options is, you know, when you go to the casino and you go like sports bet or something on something, you can do that in the market, except you don't have to be the casino or the broker or anything like that to do it. Everyday people can be the quote unquote bookie for other traders. It's very cool. But yes, by no means is it easy. Nothing is easy in trading. But yeah, I love to sell options if I can find the right setups, and I think gold presents one right now. So I'm gonna go look at that today. VIX is pretty low, so I probably won't get a ton of premium for doing that options trade, but I will look into it. And if I do that, guys, I will share that in my upcoming videos. I'll look at it today. In fact, I'm going to write that down. Just check GLD in a second. GLD strangle. Nick, what's the top setup simple section? So top setup simple. I'm glad you asked. This one is pretty cool. It's this top setups page. I don't know why it's not loading. The top setups page, however, it is just a super simplified version so that you don't have to, read the whole thing. I'm not sure why EdgeFinder is slow today. Might just be my PC. Hopefully I can pull up we've had some issues with Google's Looker Studio here recently, but let me see if I can pull up live stream questions. Okay, live stream questions pulled up, no problem. Let me just close something down. Maybe it's my computer. Anyways, by the way, if you guys would like to try out EdgeFinder, we'll be dropping some links in the Telegram channel today. Take a second really quick if you have not already to join completely for free. We'll drop the link in the chat. We'll be sharing some free trial stuff eventually in here. We'll be sharing all sorts of stuff. Free courses get shared in here. We put out a ton of, me and the team, we put out some pretty good stuff, I think, that will help people out. So join it if you haven't already. Okay, EdgeFinder's just given up for the day. I don't know why. Anyways, in the meantime, we can answer some questions from the stream. And I think we are good to go. Just going to pull this up. Okay. So, first question. Oh, we only have one question. What the heck? Dang, everybody figured it out, right? Everybody knows completely everything about markets now. If you do, let me just refresh this. Okay, no, we have more questions. There we go. Okay. Thank you guys for your questions. I'll take a few minutes here just to answer some. Here we go. So first question is from Clayton. They've been trading for 1 to 3 years. Primary goal right now is to become a funded trader. They own some of our stuff. Awesome. Thank you for your support. Let's see. Hey, Nick, I'm a big fan of the channel. My question is, how do you decide how much of your portfolio you're going to risk per trade? Do you tend to risk more on certain assets, or do you strictly adjust your risk according to EdgeFinder score? By the way, you should consider doing a fan meetup someday. I think you and A1 team would attract a massive crowd and provide great value. We have done some in-person meetings. If you're ever, or if you're near Atlanta, we actually did one pretty recently at the Mercedes-Benz Owanda sponsored event, or they were putting on an event. We attended. It was awesome. There was probably 35, 40 people there, I think. Maybe a couple more than that, but it wasn't a huge group. It was mostly for like Owanda clients, and it was awesome. We had a great time. In fact, like I said, we met Alan there, who is now sharing his analysis within the Telegram channel. So those things are great opportunities to meet other traders, to meet a trading friend. I love doing those things. I would do them once a month if I could. So anyways, to answer your question, in terms of how much do you risk per trade? So I do have what is called a dynamic risk strategy. And that's a glorified way of saying I don't trade the same exact size on every position. I trade based on a couple things. There's a couple factors, and I do think risk management it can get complicated pretty quick if you use a dynamic risk size. So let me give you my overall way of doing it. So I consult with the EdgeFinder score, right? So EdgeFinder score plays a heavy role. If it's a stronger score and things look really good fundamentally, sentiment and technical wise, I'll probably put on a little bit more on the trade. Not a lot, not a huge amount. I'm not going to go broke taking giant trades. Still a small trade, but bigger than tiny. And if it's still a good score, but not a perfect one, I might take a smaller size, right? So that's part of the dynamic risk. But what also plays a role is because I'm on a margin brokerage account, margin stock brokerage account specifically. First of all, I don't like to use very much margin. I mostly treat it like a cash account, if you're familiar with that phrase. But essentially, depending on how much available margin I have in the account, that does also play a role. If I'm like very full of positions, my next position, if adding another one, is going to be really small. Like just even if it's a good score, like I don't like to go into heavy margin territory ever. So it depends on the margin available in my account, the EdgeFinder score, the quality setup, And also I may choose to reduce size a little bit further if we're in an environment in which the VIX is very high, right? So if the VIX is really high and we're getting huge moves every day, I may also choose to scale down my size further. So I would say those are the three to four components that really help to determine sizing on my position. So this is a component of my trading that is not 100% purely mechanical either, right? So I don't have like a specific hardcore algorithmic way of sizing my trades. It is a bit of intuition and experience. However, the risk range, right, could go from 0.1% of the portfolio risked to 3% if it's a trade I really like, but rarely would it ever go beyond that. So there is a wide range of risk that I can take on positions. There's a bit of discretion that comes into it. There's a bit of intuition and experience that I've done this for almost a decade. There is some level of that goes into sizing the trades, but I consult each of these components when taking a position. I have like a checklist, right? A mental checklist. What's the EdgeFinder score? How much margin do I have in the account? What's the market environment? Are we in a really high VIX territory? Right? All of those things are important. So something to think about. So hopefully that helps to answer the question. I know it was kind of a long answer. Next question is from Bashy. They've been trading for less than 1 year. Can we get a shout out for OT? It's his birthday today and he's spending it with us. OT, man, shout out. Happy birthday. Thank you for being here on your birthday. I mean, I don't know where else you'd be. This is the best place to hang. So we're glad that you're here. Happy birthday. And maybe we get some happy birthdays in the chat for our friend OT. Thanks for being here, man. Okay. Next one is from Nick. Fellow Nick, hello. Primary goal right now is to find a profitable strategy. Can you make a YouTube video on how to properly draw support and resistance zone across all time frames? Thanks. I actually have made a couple of these videos. Search up on YouTube. Just try searching up Trader Nick support and resistance, and you should find some videos on that subject. I think I've done 1 or 2 of those in the past. I know I have. I'm trying to make sure that that title will come up with your search, but I think it should. Next question is from Matt. They've been trading for less than 1 year. Primary goal right now is to find a profitable trading strategy. Is it normal to pay interest each month on Forex margin used, and how do I find this data? Yeah, so this is going to be provided with your brokerage. And if you're trading on an FX/CFD brokerage, CFDs usually carry higher amounts of overnight cost to holding positions. CFDs offer you more leverage. It is essentially like borrowing money. And so there's overnight fees. So the primary FX broker that I use, well, I trade FX in a couple different ways. I trade it through a currency exchange brokerage, but I also trade it just through stock ETFs if I want to hold something longer term too. But anyways, the brokerage that I offer, I can search up on their site and find like holding fees or financing fees. You can also find that in MetaTrader itself. If you use MetaTrader, you can right-click the symbol in the navigator window or whatever it is, the window. Right-click it, click specifications, scroll down, and you can find like overnight or swaps or carry. Those are the words that you're looking for. Interest, margin, things like that, and then look for the overnight rate. Hopefully that helps. Let's see. I'm just going to check really quick. Next question is from Glenn. Glenn has been trading for 3+ years. They own some of our software. Thank you for supporting our work. What is your trading related question? They said, I've been trading for about 3 years, trying to get into options, and I've been watching some of your options content recently. How much equality, but I think you might mean equity, do I need to get into options? Yeah, so options, it depends what you're trying to do. But if you are doing what I would search up is if you're trading options in a similar way that I do, which is I like to sell options rather than buy them. Some people like to buy calls and puts and make bets on where the market's going to go. Certainly you can do that, and there are people who are very successful doing that. I actually prefer to use options to sell puts and calls. And if you're looking to do something similar but you don't have a large trading capital base, what you can actually do is you can trade bull put spreads. You can trade iron condors. These are things that require less trading capital. So I would encourage you to look up those things. Look up selling credit spreads, and look up, in fact, in my options video that I did, I have like a 30-minute video. If Chandler or James, if you guys could grab this video for me, this would be awesome. So look up Trader Nick options on YouTube. There's a 30-minute video that I did. It's an options trading for beginners video. If we could get that linked in here, that would be amazing. In that video, there is a chapter in the timeline. There's a chapter, I believe, specifically on trading options with small accounts. Now, I'll tell you what, my options videos don't perform very well on YouTube. It's just not my audience. I love trading options and I will continue to trade them privately, just probably not going to make it my main, thing on YouTube. And that's okay. I've done some videos. That video, there is a topic within it. And I think Chandler or James, they're looking for the link. So give them just a second. I think they'll find it. If they don't, I'll look for it. But in that video, there is specifically a way to, here it is. Thank you guys. Appreciate you on that. This link. So if you're interested in options, bookmark that video or save it for later, or whatever is easiest for you. There's a part of the video specifically talking about trading options on a small account. Okay. Okay. Let me check to see if we have any further questions here. Yep. We got 2 more here. Let's take a look. Robbie's our next question person. They've said they've been trading for 1 to 3 years. Primary goal right now is to learn about fundamental analysis. Don't have our software tools yet, but are interested. Hey, Nick, what's your current outlook on the UK 100, the FTSE? I feel it could be quite bullish with the news regarding potential reevaluations of the Brexit deal. However, do you have a different outlook? Yeah, so I'm pretty much bullish on indices across the board right now. However, pretty much everything has become a little bit stretched in my view. So I love the idea. Like, you give me a couple weeks down on international indices, and I'm probably buying the FTSE. I'm probably buying the DAX. I'll buy the Chinese, the Hong Kong 50. Right? I'm looking to buy all of them. I'd love to build a basket of indices on the long side, and I think that they should continue. I think you look how good the FTSE looks right now. This looks better than U.S. indices. It's back to those highs, and I love that relative strength. I also love the DAX. DAX is probably the prettiest index right now on the market, in my personal opinion. So I like all of them, just waiting for pullbacks. I think that trade deals really favor, especially places like the UK and probably Europe will probably make a deal, and those things will be really good for those places. So I like the story. I like the long side. Steven, been trading for 1 to 3 years. And in just a second, guys, we're going to pass the show over to Alan Perez. And let me just answer this last question. Steven's been trading for 1 to 3 years. Primary goal right now is to learn about fundamental analysis. Does high inflation cause growth in that currency or decrease? Getting confused after watching your videos and going through the free fundamental course in the inflation part. So, first of all, you made a plug to our free fundamental analysis course. We'll drop that link here today. First of all, we'll drop the Telegram channel link. So step 1, for anybody who would like, so I have been dropping this in the Telegram channel. We have, I'm not even kidding, guys, the same level quality that you would pay $1,000 for in terms of a course on fundamental analysis. We've made it for free. There's no hidden secrets to that. Straight up, here's how you can get it. Go to our Telegram channel and subscribe. After this stream, I am going to be dropping the link to our free fundamental analysis course if you want to get your hands on that. By the way, we also have a free options course. We also have a free technical analysis course. We don't sell courses here. We have them all for free. But if you want them, join our Telegram channel. We'll share the links to that shortly. So to answer your question, does high inflation cause growth in that currency? So high inflation does cause strength in a currency as long as the currency itself is solvent, right? So if you got US dollar seeing high inflation, right? So if the US is seeing rising inflation, like we saw in 2022, take a look at what happened. The currency exploded higher for a full year because the Fed, the central bank for the United States, was hiking interest rates to combat that, making dollar debt, right, dollar denominated interest products more attractive to lenders. If the interest rates are going up, right, that makes borrowing money more expensive. As the lender, you make more money lending money in high interest rate environments. Rising interest rates favor the lender and hurt the borrower. Lower interest rates and a weaker, typically a weaker currency that follows is more helpful to the borrower and less helpful to the lender. So yes, rising inflation, we have that in our system, the EdgeFinder. It automatically will calculate rising inflation as a positive catalyst for currencies. So there you go. Okay, guys, our next stream host is Alan Perez. He also, by the way, just a sneak preview here, has been sharing some of his analysis in our Telegram channel, and we've got much more exciting news on that front coming to you soon. So stay tuned. Check him out. Here comes Alan Perez just after this quick break. Stay tuned.
Attention A1 Trading Show fans, if you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello, good morning, everybody. How you guys doing? Happy birthday to OT. I saw you in the chat, and Nick beat me to it, but happy birthday, man. I hope you're having a good one. Let's go ahead and look at some charts here. We got the DXY hanging out at the support at the 50-day, with also this support here that was previously resistance, now support. I'm interested to see where we're going to go because I think right now it's a very neutral spot. And fundamentally here, we got the pound tomorrow, the UK coming out with CPI, and it's forecasted to come in a little bit higher than expected. And then on Wednesday, we have the Euro, pound PMIs, and U.S. employment claims as well. So I'm curious to see if we kind of get a flush lower. Also, too, I was listening to Kathy Lean, and she was kind of just emphasizing how in about 2 to 3 weeks, the Trump is going to go ahead and just announce the tariffs for all the other countries. And there's a lot of countries to be negotiated with. So there may not be enough time to go ahead and just sit down with everybody. And so they might just go ahead and just list out, who's getting what. And the markets may start to go ahead and react to that and pay more attention to those tariff headlines because they kind of just settled down for now, at least. And I think, if we're looking at the stock market, we haven't had a pullback at all. We've been just straight up. And so if we do, let's say, approach these all-time highs again, right? Either that could be the news flow that drives us to get, pullbacks again or something else. But for everyone trading the NASDAQ and the S&P, I don't like trading up here. I would much rather wait for the 200-day, fill these pockets even down here. I think a 10% pullback is still healthy. Like, let's see, where's 10% at? 10% right here. Yeah, like if we look, this reacted here. If we just put a line up here and then flip this to a support level, 10% in hindsight in the moment may seem like we're going to crash again, but I think it's still a good level to go ahead and pull back. And even if we feel this pocket here, I think that's still a good basis to go ahead and buy the stock market, whether it be the NASDAQ or the S&P, because we've been just straight up. And I don't like that. If we keep just chugging higher, then that's like bubble behavior. So even though in the short term, we may feel very euphoric, like, oh, look, we're getting all these gains. You got to be mindful of the risk that it's just one catalyst or one thing away from just kind of dropping down. So how you guys doing, regulars? Am I still on UJ? So yeah, I'll go over UJ. I got trailed out. So all of my trades, for the most part, I've been trading into profit. So I either break even or just solidified gains already. UJ, I got trailed out, but I'm going to talk about UJ as well, because I do think that perhaps the dollar has a little bit more room to go. A deal is when a country says I'll have $1 billion worth of rice or whatever. Okay. S&P will go lower. Betterment. How are you guys doing? How are you guys trading? One thing too, gold. Look at gold. I did mention that, let's see, when this level got pretty much taken out, this double top, we could flush lower. We did for a little bit, but then we came back and now we're hanging out at this level again. If there's more uncertainty for whatever reason, I think buyers will step in and take this a little bit higher here. But we're below the 50-day. Yeah, honestly, like if we were to flush low and let's say this level of resistance holds, then if we just look left here, this will be a good level of support. And if that one gets broken, we look left even more. And then I would probably say something like this. That is gold for me. So 2 levels of resistance here. I'll just draw it up for you guys. And then if you guys want to reference this for your own self, this is just how I would look at gold chart. So level of resistance right now, if we break above this, this will be another level to be mindful of. If we break below, this is the level of support that could be, buyers can step in here. And if we break this one, this will be another level of support as well. So just for reference, I don't think I've seen Alan on here for a while. Stream feels nostalgic. Oh man, thanks for the compliment. I appreciate that. Was I here last week? I was here last week. Maybe you were out, or was I? Was I gone? I don't know. But yeah, that's a goal for me, guys. This level I think is a really key level because we're pretty much at equilibrium between this resistance and then the support below. This is a good level to go ahead and be mindful of. We kind of go down to the lower time frames here. We've just been hanging out here. This would be, if you're like shorting this level, I could see how it's so frustrating right here, especially if you're experiencing swaps or whatever. You're paying to be in the trade and it's not doing anything. Let's go ahead and look at, I stream every Tuesday. I may start streaming more once I know what my schedule is going to be looking like, moving down. I may be able to hop in, more times throughout the week, just earlier. Dollar Swiss. So I posted this in the Telegram. As of yesterday, when I posted the write-up on the Telegram, so the SXY, which is the Swiss index, went ahead and filled the gap. But on the futures and also on, I kind of looked at most brokers, so Oanda, FXCM, and I think one other broker. The gap was unfilled for about 1.5 pips or 2 pips, depending on the broker. And now, as of last night, we went ahead and filled it all the way. And then we had this on the 4-hour, this bullish candle that closed above this level of support. So I'm just curious to see how we're going to end off, right? Similar to gold, right? If we just stay hanging out here, I'm not going to like that. And then it's just a matter of like, you're going to be in a position where you're speculating as to what news is going to look like. And we don't want to be in that position. So right here, I'm positioned to the long side. If we break below here, I just get taken out, no problem. Dollar yen is a good one for me. So I saw that we are on this level of support. We actually broke below, but we're staying above this 50-day. And if we just pull up a fib for dollar yen, it may have changed as of last night, but yeah, we pretty much respected this 50-day 50% retracement level, which is a good thing to see for people that are going long dollar yen. But if we do get that uncertainty again, like we did on April 2nd, then we can just flush lower. And then the next level of obvious support will be this 140 handle where it's been respected 1, 2, 3, and ultimately 4 times on the daily or weekly time frame, however you want to look for it. If I'm going long dollar yen, honestly, I wouldn't no longer stretch for take profit way up here. I'd probably just wait for a retest of this level of the 148, 300, give or take. All right, let me look at the chat. Alan Jr., you're thinking of a breakout of that level for the for dollar yen, I would assume. Yeah, it's a gloomy day right now, but yeah, when the sun's out, it's super nice, and the trees are starting to form. So like, there's a lot of greenery embedded. But you know, earlier in the year, December, January, all the plants were dead, man. And okay, you're thinking of a breakout of this level. Okay. Oil is another chart that I was looking at as well. Did we bounce off of the level? I don't have it marked up here, but basically my resistance level for oil was like this. Yeah, so it looks like I don't know. We'll see what happens with the 50-day right here. Yields are up. This is one of the risks that the Fed's going to have, right? If they start cutting rates, but yields stay up, then that's a risk. Also, to the Moody's thing. So when the Moody's thing came out on Friday, I actually saw in real time, like the last hour, 10-year yield dropped a little bit, and it looks like we've made back all of that. So it really wasn't that big of a catalyst. S&P and Fetch also had downgraded that. I think Fetch did it first in 2011, or S&P did. I think it was Fetch though, that they downgraded it. When they did that one the first time, the S&P actually saw like a 6% or 6 or 11% down move, and we didn't get that reaction this time around. A lot of it could be because it was already expected. Like everyone kind of knows the situation that we're in. It's not a secret that we have rising debt, and then growth is also kind of just not keeping up with it to maintain it. Excuse me. So I don't think it was much of a surprise as well. And then also too, when that came out on Friday, the first thought of my mind, if you guys ever seen the movie The Big Short, when was it Moody's? Actually, I think I'm wrong. I think it was like the Fannie Mae or Fannie Mac, one of those. But anyway, they were keeping CDOs as a AAA when they kind of knew already what was happening, to kind of protect line of business and credibility and stuff like that. But that ended up hurting them in the long run anyway. But I digress. Gold. So Saif says gold is making a move. Is it? Let's see. Oh, it is. It is. It's breaking out of this level. Good catch. I wonder if anything happened. Let's see. Financial juice. Market moving. Just the CPI. Oh, this happened just now. Eurozone consumer confidence came in a little bit better than forecasted. Yeah, better than forecasted. So that I'm sure Euro's up a little bit on that. Yeah, that's what that is. Let's see, Eurozone also too, like this level. So we were in this channel for a little bit for the Euro. I would say it looked like this, but it's not a really good channel, honestly. But if we were in this consolidation area, this was a level of support. Like this resistance really wasn't a pretty one, but as far as support goes, this held up multiple times. And then we broke below it, bounced off of this one here. If we just look left, and now we're bouncing off of this resistance level that was previously support. And the 50-day moving average was also there as well. So I would like to see it hold. But then also, like I said, you have Euro PMIs on Wednesday that could affect it. The Euro, tied to the dollar index, the Euro makes up like 40% of that basket. So if the US has a negative reaction to employment numbers, then the Euro could also, even though it's not directly the Euro's employment numbers, it could affect that and it could send us higher. I think if we break above this 50-day moving average, then we have good probability that we're just going to at least retest this 1400 handle on the Euro. But I'm interested to see if we get some good figures Because even if we get good figures for employment on the US in the short term, sure, it's great, but it's also, gives the Fed more confidence. Now, I know they have to, kind of consider a lot of different variables, but that could be an added confidence factor for the Fed to kind of go ahead and start cutting rates. And then we could see the pricing, or we could even see the CME Fed Watch to kind of shift. And I haven't checked it honestly, so let's see. So June, yeah, it's pretty much guaranteed nothing's happening in June. July, actually July as a whole, 71%. It was 66.9 or 66.4 last time I checked it on stream or on a video. And then September, so people are actually betting a 50% chance that September is going to be a jumbo. And then, let me see, jumbo. Yeah, so actually that's not a jumbo. So 30% chance of a small, 52 of a jumbo, 16% of a bigger one. Oil's dropping to 57, so I'm shorting it. Yeah, Alan, if you got this level on oil, if you're like somewhere in the 65, 64 area and you're shorting oil, you have a really good price as far as like, you're at a premium there relative to like what's been happening. And so that's a really good oil short. But if you're shorting kind of like at market price here, depending on where your stops is and your sizing, if you're having like a super small stop loss, there's a chance that we could just kind of hang out right here at this level, similar to the price action of gold where we've been hanging out. But it seems like we're breaking out on gold. So that's pretty good to see. Markets have been pretty quiet lately. So seeing a movement is a good thing. Let's see what the chat's talking about. I think you guys are thinking of Elliott wave theory. I think that's what you guys are chatting about. I see Bashy in the chat. I haven't seen Bashy in a while. Good to see that you came back on, Bashy. Hope everything's been good with you. Pound dollar has been, actually, it's been pretty resilient, but it's respecting this resistance level as well. We came back up here. What I had my eye on the pound was if we were going to close below the 50-day, which we didn't. We broke past that. I want to see it hold above for any bullish momentum. And then if we kind of just look left here, if the pound breaks out, I will be looking for something like, let me see, something like this. Something like this on the pound. That'll be like very, very short term, the closest range, but that's pretty close here. So if we kind of look further here, I would look for the pound, something like this. If we move this up here, that'd be a good target for the pound. And then if that breaks out, obviously the euro will rally as well. And then euro targets for upside would be, like I said, this 1400 handle, or even the recent highs at the 15,680. Rivery, hey Alan, Nick mentioned you primarily trade Forex. Is that where you make most of your gains? Yes, that is the primary income is Forex. I like to swing trade Forex, and I'll just go over like basically a good scenario for myself and how I do it. So with Forex, right, when they tend to trend for a very long time or for a good amount, right? And with Forex, when you get these, I'm gonna go on the weekly here so you can kind of see what I'm talking about. When you get on the weekly and you see these levels of support that held before, when price gets to this weekly level, they tend to respect that. Now, if there's something that's a catalyst or something that's really driving the market, then these levels do get broken, and you'll know, right? If you're like at least paying attention to what's going on, you'll have an understanding of, okay, there's a good chance we might break this level. But for the most part, they tend to respect these levels, right? So when we approach these levels, and what I do primarily is like I'll take a stab at it with all of my trades are like Nick said it best, it's like a campaign, right? It's like I am going to be dollar bullish for the short term or for now, and what's the best way I can approach that? So if I'm going dollar bullish, I'll look at most of the major currency pairs, look at which one's setting up the best technically. Dollar yen was a really good one. for a lot of different reasons. You get a positive swap or a positive carry, then added with appreciation. It's at a good technical level. We were getting some trade talks with progression. So initially it was India, right? And I was like, okay, well, we're meeting with India. There's a good chance that we may meet with other countries. And we ended up meeting with the UK and then the China thing. So fundamentally, sentiment-wise as well, we were getting to a very extreme level in sentiment. If you look at the put-to-call ratio for the stock market, and the VIX was starting to fade off of that. So just a lot of factors, right? So always start off small. And because currencies tend to trend really big moves, there's a lot of opportunity or times where you can add on to that trade. So you start small, and if you're wrong, you're wrong. If it breaks lower, then you at least start to go ahead. Hope you have an umbrella, Alan. Yeah, I know, man. It's pretty cloudy here. It looks pretty dark. I have a candle. I have the mood set. But yeah, like I said, so you start off small, and if you're wrong, you're wrong, right? But because we know that there's going to be a bigger expected move, there's opportunity to go ahead and keep adding to the position. So you can, and I always say this, you can always add to a small position. But if you start with a big position, it's so much harder psychologically to take off. Then you start going ahead and like, I don't know, you start marrying the P&L, and now you're trading the P&L, and then the trade turns into an investment. And I always say, when you start turning a trade into an investment, that's not where you want to be at. So I go ahead and start the trade, and then you look for scaling opportunities. And when you're looking for scaling opportunities, I always look for an opportunity that is as if you're getting into the new trade brand new, right? So let me clear this up for you guys right here. I'll get rid of these moving averages. So let's say that I bought initially right here, right? If price is just right here, I'm not just going to go ahead and add, right? Because then your average price moves up a bit. What I would rather do is, let's say we get up to right here or right here, and we start seeing like a little bit of a pullback. Then I'd say, okay, if this is hypothetically the high for now, let's put a fib and see where we can retest. And sure enough, what do we see here on the 4 hour? This is the bottom. This is the top, right? In hindsight, right? If you're like in the moment, if you don't know what's going on right from this candle here, you could say this is the floor. And if we start flushing down and filling this pocket, then this could, quote unquote, be the top. And so you put that fib level there, and then there's a 50% retracement. That could be a scaling opportunity, right? Let's say, and then if you do that, your average price is now over here. Whereas if you just buy here just because you see price going up, then your average price moves up. And then if you start coming down and you get a very healthy retracement, which is very natural, then next thing you know, your trades break even, and then you're panicking and this and that. And then let's say you miss this opportunity. Well, you see this level as well, right? This high as well. And then you do the same kind of thought process, thinking process, right? If we get a pullback, look, 50% retracement level, and even went down to the 61%. Never touched it, but it got close, right? So you look for those opportunities, and then you start seeing market structure. And then, you know, as you start riding the trend, market structure will develop. So you make new higher lows. So there's 1, there's 2, there's 3. This could be 4 as well. And then you start trailing your profits, and then you try to maximize the gains, right? And then you have a take profit level. So my thesis, my thought process was like, well, before this whole move even happened, or this whole move happened because of the uncertainty that tariffs brought, right? The safe haven demand with the yen and the Swiss. And so on April 2nd, when all this happened, right, it was initially a 10% baseline tariff. And then whenever he added the 50% reciprocal tariffs, that's when we saw these very strong bearish candles close. And that's when this all happened. So that was like my target process. Now, right, keeping an understanding of what may happen, knowing that the tariff deals with the other countries that we may not have an opportunity to talk to are only 2 or 3 weeks away, then you have to be realistic and say, well, we may not even get up here. Let's try to take profit somewhere, maybe the recent high, or somewhere here, or just right here, right? Because the dollar is at a very neutral spot. So that is how I basically go about my trades. Start small, build on it if it makes sense, be responsible with your add-ons. I always say, like, if you're adding on, try to add on less than the original size. That way your average price doesn't get moved up too much. Because if you add equally, then it gets up moved to 50%, right? And if you add on higher than the initial price, then it'll really get moved up. And then you run the risk of, price fluctuation, and you get to break even and you're panicking, but really market's just doing what it's doing. It's just pulling back, fluctuating, making new higher lows or whatever. So that is my approach. I'm sorry if I didn't really interact with the chat too much today. I have about a minute left. We have Mr. Chris Pulver coming on. Thoughts on New Zealand yen? Not something I trade actively that I'm looking at, but I can pull up the top setups for you guys as well real quick. I'm excluding, miners. On the top setups page, let me look at the eco. By the way, guys, was that a little thing I went on? Was that helpful for you guys? Just to kind of get an insight as to how I trade and how I approach it. Obviously, if you are in the Discord, the VIP Discord, and the Telegram, well, I don't know about the Telegram, but the VIP Discord, I'll be sharing my trade ideas come June 2nd, because I'm going to be going down to Houston, Texas, and then I'm going to go ahead and be out of the country. But if those are helpful, I'll try my best to kind of always emphasize like why I'm in the trade, risk to consider, right? Because a lot of the trade management stuff is very discretion based as well. Lee James, thank you guys. Yeah. So when it comes to the signals, I won't be able to share. I don't think I'll be able to share like actual percentage risk that I'll be taking and stuff like that, different things of the trade, because there's a fine line between trading signals and then financial advice. And I'm not a registered CTA, IRA. I'm not registered with a broker dealer, so I can't go that route. And so I'll do my best to provide as much insight and just give you guys risk to consider. That way you guys can also start forming a level of thinking of like, okay, I'm in the trade, but let's look out for these things. And if you catch these things, you can start getting that level of discretion as well. Chandler, if you could let me know when Chris Pulver's on, I want to be respectful of his schedule and his time as well. Yeah, Bashy, 250 subs. That was pretty cool. It was at 200 something yesterday, and I woke up and it was like 247. So, or 249, as you said, which is cool. 50 overnight. Palantir's retesting 125. Ball out. Have a good one, man. It looks like ball out. It looks like we may be getting that dollar flush that you were looking for. We'll be mindful of the fundamentals for sure. Palantir, let's look at Bitcoin. Speaking of risky assets, approaching all-time highs. Let's see if I were to mark up Bitcoin, because I know we got some Bitcoin traders in here as well. Resistance, if we look left, couple times that price interacted here. This would be a support level that I would look for. Boom, something like that. Alan, when Nick talks about German DAX, is that the 30 or the 40? I can't speak for him, but I think it's the 40 that you're thinking of. But it may be better to ask him, because I don't know, to be honest with you. You always do the fib off the 4th. Oh, this thing popped up. Someone asked as well about New Zealand yen. I don't know if I addressed it all the way. My bad. New Zealand yen on the EdgeFinder. Where is it? Am I missing it? Come on, I know you're here somewhere. Oh, it's actually getting a 5 reading on the eco score. Let's see what the surprise meter has been. So this is cool, right? So like this is an eco, right? And then if you kind of pair it with the, where are we at here? Come on. Surprise meter, pair with New Zealand. Look at that. New Zealand's also been surprising most of their their figures that come out on the economic calendar. Each country or most economies, every week they have something, or if not every other week, they have some kind of economic data that's going to give you an insight as to how they're doing, right? Like pretty much like a health check. And that health check is what traders kind of use to speculate and see, like, okay, is economy contracting or expanding? New Zealand, 88% is surprises, which is a really good thing. So if you look at the New Zealand and then you also look at the Japan right here, let me draw on these for you guys. New Zealand here, this is yellow. Probably can't see that. New Zealand been surprising, and the yen, it has been missing, right? So when you look at it from a good standpoint, when it's doing good, this thing's going to move to the right, and when they're surprising in a bad way, it's going to start moving to the left, which is a really cool tool. So pairing that with the eco, right? You have your fundamental, and if you look at sentiment, maybe let's look at a retail sentiment. I don't think you can look at the minors, but you can just use the two majors. So you can look at New Zealand dollar. Let's see what market sentiment is doing for you guys. If it can load. Retail sentiment. I don't think the EdgeFinder is working right now. Here, let me try to address this as the best I can. So we know that fundamentally they've been doing good on their readings, as well as the EdgeFinder is also expand. Okay, New Zealand dollar, 59% of retail is long, 41% is short. In the yen, it's pretty much 50-50. Okay, so that's pretty much not the best of the best reading. Oh, Chris is here, guys. All right. Thank you guys for watching. Thank you guys for giving me your valuable time. I really much appreciate it. You guys have a blessed one. Safe trading. Bye-bye.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Getting a nice little push on the SPX just right now. This is good. Hopefully we're coming back into some of this gap fill territory. I have a put spread combo that I'm liking. I'm going after a, kind of run up here towards like 59.80 to 6,000. So initially this morning, I had a sell side on the call and put spread that did pretty well. Grabbed some profit there in about 30 minutes. Right now, this is the direction that I want to see. Hopefully I can squeeze in about $100 here. It's trading for, I don't know if this is like off right now. Right now showing about $60 a profit. Let me see if I can get this thing. So I have a $1.30 set. I'm going to try to set this for a $1.60, which would give me $100 per contract. And let's see what we get. So I'm going to bump this chart alarm down. Let's go to like 55 here. So 59.55. See if we can make just a fresh intraday high off the open versus staying in this chop fest. So hopefully a run to like 59.55. I've got a nice level at 59.70. I'm looking to see if we can have a directional run today towards 6,000. I'm looking to see, I also don't have to set a take profit on this. I might just go after a slightly bigger winner. So let me set this one. Replace $1.30. I'll set that at $1.30 and just keep an eye on it for the morning. Chart alarm goes off. That's a good sign. I'll spot check it and then look to see if we just stay above my levels today. As long as price stays above here, then that is potentially worth $260 today. And we stay up there, that's good. So if we get a, move back into the gap fill, a directional play into this, like I said, 6,000 handles, a big monthly level I've been watching this week. And we'll see if we can, kind of eke out some fresh highs. So let me see what this looks like. Keep an eye on this one. All right, let's go some top-down analysis. I think everyone may be wondering where the turning point is, if there is one. There's not a ton of resistance or support in this market. Do I swing trade options? Absolutely, always. I swing trade with a lot of ratio spreads. I swing trade with a lot of put spreads, debit spreads. Um, I swing trade with diagonal spreads. So yeah, you give me an option strategy, I've probably traded it. Favorite asset class. All right. So what I was just saying is there is not a ton of resistance up here. There's also not a ton of support. I think that it's we're clearly in a bit of a drift mode right now. Watching the markets do its thing. It's like you just kind of grind higher, grind higher. Yesterday was really interesting. We had the Friday downgrade. The market opened up lower and just ripped immediately. And we did end up poking some fresh highs. So I'm curious if that was just a bit of a noisy intraday move that is still kind of topping out, or if there's still room to try to get up into this like 6,000 handle. Above 6,000, there's not really a ton of resistance. So it is quite possible that if we get to 6,000, it might be a round number resistance area, but we also may just keep drifting. What's to stop 6,000 from becoming 61? I mean, right now it's like you look left, bulls are going to go, come gunning for that high. Then let's see if we get there, I guess. Okay. So just keeping an eye on things. I still personally would like to see a pullback. I think this market has been a bit ridiculous. Given the right side of the trend line, it's just, I mean, yeah, it's up nearly 500 points on the right-hand side of the trend line. But it just has been like, intraday and just massive gaps. So we'll see. But I'm going to keep an eye on this one for this morning and see if we get up into this gap area. Qs are very similar. So if you go, NASDAQ, there's a monster gap right here that I'd like to see filled. I just don't know what I mean, it's not just going to happen by itself. I mean, more than likely, there's going to have to be a why. Why is that happening? And look, it doesn't matter why. I think the reality is this should happen. This should fill. The question is, are we going to fill from a higher level, or give bulls a chance to actually participate in a little bit of a backfill and then a run back up? And what we never know is like, what day, what's the catalyst, how long does it take? If this was just like a slow grind lower, well, it'd be way easier to be a buyer, because that would just be a matter of, okay, well, buy it. But if it is like some, monster red candle, okay, fine. But I still think that offers up a buying opportunity. It's just gonna scare investors a little bit more. You just don't want to see like a high volatility sell off, But that being said, the VIX has been much, much, much lower. One of the biggest vol crushes we've seen, I think, maybe one of the top, one or two or three in history, as far as how persistent this was at going down, especially since that pivot on the, the 7th was like the peak fear. And then we had the 9th, which was the largest single day crush in volatility ever, percentage wise. And here we are back into the teens. So, any type of elevated move in volatility, I suppose it makes some sense. We do see elevated volatility after we have this big crush. So we'll keep an eye on it. Right. So there's, S&P and the Qs. Go to the Dow. United Healthcare came back in a pretty decent way. Healthcare has responded pretty nicely. I'd still like to see some gap fills here. Dow actually looks pretty attractive to continue to grind higher. S&P is much closer to all-time highs. Qs are much closer to all-time highs. Dow has a little bit more gains. Russell has a long ways to go. Okay. Same thing here. It's like, do we have a gap fill? I mean, the Russell to me looks a lot better if we're above the 200 moving average, right? Like, I'm using the Russell to sell a bunch of premium because it's a cheaper ETF. There's a lot of potential catch-up trade here. I think the issue that the Russell has is there are a lot of stocks in a 2,000 stock index, and a lot of them are not profitable. And until the Fed starts to cut rates, this may not benefit a lot of those companies. So, if we have a resistance level, I can see this thing pulling back and still technically stand on the left-hand side of this trend line, right? I'd feel a lot more confident about longer-term gains on the Russell if we break this high, right? And then pull back and fill this gap on the right-hand side of the trend line. That to me is a much better position to start buying and then looking to go longer term to the upside. But if I'm buying it here, it's like, well, this could just turn back down. That doesn't necessarily give me anything bullish. This might still be setting up for some type of reversal pattern, and we could pull back into this area and still be a bullish trade. But then the next leg would be we have to surge on the right hand side of the trend line and go up. Right? Okay. So just keeping an eye on a couple things today. Good there. All right. So that's Russell. Go back to the chat. Oh, by the way, Chandler and James and team, I do have a hard stop at 11. Let me confirm that here. Okay, so I'm going to go the power hour here. Let's get through as much as we can here in 30 minutes. All right, so Qs, Dow, Russell. Let's take a look at bond volatility is up a little bit. SPXY, I wouldn't mind getting some type of elevated volatility to buy some more SPXY, but this is like I only trade this when we have a vol event. That's it. Dixie, this is the DXY. So I'm not getting faked out into like selling the dollar. My exposure on this one, as we talked about now for about a week, is I'm long euro dollar. And so far that trade's looking pretty good. I'm up about 70 pips. And I want this level. So this is trade 1, pending order trade 2, pending order trade 3. If this goes up to retest the highs at 1500 or 1550, I'm going to close this trade for a winner. I'm going to cancel this trade and cancel this trade. That is the setup. Because all this is for me is a swing. We go from low to high. We pull back between the 30 and 38% retracement zones. Okay. Probability, in my opinion, if those are shallow pullbacks, is that we go back and retest the high. That's all I want. I'm not looking for some crazy run on the dollar. If we go back up and we range where this goes back up here, then back down here, back up here, fine. This is the trade that I'm after. Okay. So this might be the easiest trade. If we're long euro dollar, we get to the highs, I'm taking profit there, and I won't worry about those trades. I'll just cancel them. Okay. Thursday. Hang on a second. Sorry, I'm getting some schedule asks. Give me one moment here. 1 to 2:30. Okay. So that's euro dollar. That's dollar index. That's about the only way I see a clean trade on the dollar is if we retest the low. That's a good trade to me. I'm not taking the plunge and just trying to really dump the dollar. I think this, if anything, this works its way back down, test the lows, maybe goes a little bit lower, look for a bear trap scenario, maybe some divergence, and it pops back up here. Strong support that can still become resistance. Obviously a big directional trade is oftentimes followed by non-direction, right? A decision move is followed by indecision. So I'm not getting crazy directional here outside of maybe a little bit of range bound trading. But if we're, selling high and taking it back down to retest lows, that'd be the same thing with that euro dollar, buying that 1150 area, trying to take it back up to 1550. Make sense? Okay. That's dollar. Let's go oil. You guessed it, still in range. I don't have a trade on oil. I just think this is something to watch. Honestly, I say this a lot. Like I like the idea of just constantly selling premium on oil. I just don't like the backwards reward to risk. And I don't know if this is going to be. I mean, at some point this could probably be like a volatility play, but we're just so stuck between these range levels. I just think oil is If you got the guts to, sell premium, take your strangles, your iron condors, that's a great trade in the futures market. I just don't know if we get a pop to the upside or downside. It obviously threatens those positions. So, trade accordingly and make sure the risk isn't crazy high. But I mean, that to me is a high probability right now, is we just stay range bound. Natural gas. I need to add another leg to my UNG position to lower my debit. I've got I just had this one expire on the $19 call side, so my debit's 1088 from a $5 long. I might just keep it at 19 or 18 to make a few bucks on this. I might roll it down. But I do think, I mean, I'm long out to 2027. I think natural gas will still be something that goes up. Gold, hey, gold's making a little run off that 50 period moving average. So I got to ask how many people are long gold. Maybe that's enough. Okay. Just saying, look, I'm still going to be very patient on gold. This, and this 100, 144, 200 moving average. That's what I'm waiting for. To me, if we're in a bit of a correction in gold, it could play out this way, right? That'd be my correction. So high to low, lower high to lower low, lower high to lower low. This actually would be a pretty nice orderly retracement on gold. And I'd love to get a position where I can go, here's what I want to see. I talked about this yesterday. I'd love to see gold come down to this 144, 200 moving average, close below it, close above it, take a trade, position for gold futures, position for GLD, go back up to the highs. If we go higher, that's gravy. We get back to the highs here. That's my primary trade. Try to position for a, low risk, high reward, give myself, 2 to 1, 3 to 1 on a swing position. But also, if I'm going to hang on to a core position for higher highs, yippee skippy, but I'm not bearish. I mean, I'm just waiting to add more exposure to gold. This to me in the near term, I just think we have a little bit of a correction. So it's hard for me to justify buying unless I'm going to buy small and small and small, and that positions me for a bigger picture move. That's it. Like if I buy it here, I can't put a stop loss there. That's a terrible trade. So I buy it here small, I buy it here, I buy it here, I dollar cost average. That's my position. Okay, silver looking better. I still like silver a lot. I think this structure is pretty nice. If we can get a break to the upside and this runs, look, if we take out this high and this high, silver is open space above $35. I love silver if we get above $35. I'm prepared for silver to still maybe come back down into here, into 29. And if it does, I'll still look at positioning maybe some SI, some silver futures. But if we break above 35, if we get a play up into here and it breaks above 35, I'm holding this thing to 45 bucks to nearly 50 bucks. That's my big directional play that I can still measure, that I can get back to these recent highs. 2011, 1980, those are highs around 50 bucks. I'd love to see silver get back there. We're celebrating gold at all-time highs. Why can't silver, revisit all-time highs? All right, Bitcoin. I put in some buy orders on IBIT yesterday. I put in a trade on IBIT. I'm looking to basically, fill in the pockets like we talked about the last couple of weeks. I have a position to buy here, and a position to buy here, and a position to buy here. 1, 2, 3. Accumulation phase. We come back up to the highs again, and maybe dump some shares, maybe not. Maybe hold on for higher highs. Obviously, if we get to the highs, that's fine. I'm still holding a core position. If we break the highs, okay. There's, it always makes us feel like, should I just buy it now? Well, think of it this way. If we break the highs, we're likely still going to pull back to find the highs, right? So this becomes a potential bouncing point. You can still enter there if you are convinced of the breakout. I like the potential overbought conditions with divergence. I want to see a bit of a backfill here. So I'd like to see some efficiency. Now, we may not find position 3, but I think position 1 and or position 2 gets found. And that's what I'm watching for. So I'm leveling into IBIT right here. So leveling in around 50, like $54.50, leveling in around $50 and down near the lows around $44. Those are my positions. Okay, Ethereum. I mentioned this one. I personally traded Ethereum back here. I was long in Ethereum here, and I was long in Ethereum. Where was it? Over here. This was like a ratio spread that I did on an ETF that made me some money. I'm glad I got out of the trade because obviously it went against me afterwards. But now that we are on the right-hand side of the trend line, I'm sure there are some speculators that are talking about how the catch-up trade would be Ethereum outperforms Bitcoin. Maybe it does, but I still like Bitcoin better. Okay, Mason, I literally just talked about silver. If we break 35, I'm going to 45 and 50 bucks. Still good support at 29, still good support at 26. But hopefully this is just a little bit of a pause. I'd love to see silver get a run here, break the high, get some open space, and off we go. I mean, it's not going to rip. Like, silver is usually pretty efficient. It doesn't go up without having pullbacks, but there could be some really good buying opportunities to buy higher lows. Okay, copper. I'd love to see this trade work. That little like 40 to 45 day butterfly spread that I did, I'd love to see this trade work. I paid $90 for something that could hopefully offer up like $1,400 in profit. Let me take a look at my SPX trade this morning. We're getting a move to the upside, which is going into that opening bell range. Let me check my position. Now my dollar, all right, I'm up 90 bucks, actually 110 bucks right now. Let me see if I can close this thing up. $1.55. Let's go, man. All right, I'm going to take some money out of this put spread this morning. Take a look at a couple of my levels. There we go. So this is SPX getting just above that opening bell range. Let's close that gap, baby. Hopefully we're making a run towards, this is starting to climb a little bit more towards the 6,000 handle. I've got two trades running right now. One is a put spread that's looking better. I might just protect that profit right now. And then I've got a butterfly spread that is right up here that I'd like to see if we can make a run directionally for the day. That butterfly spread for 40 cents can hopefully double. So right now, put spread is getting close. I'm going to update this one. So buck, let's go $1.40. See if I can close this thing down. Bah, so that's $1.20 on that one. I'm closing that thing down. Okay. Update. 250 credit. Close $2 debit in session. The put spread combo entry for 260 credit. Close for $1.40 debit. Just now. Okay, so now we'll see where this day wants to unfold. If we see more directional pushes to this high, that's good. I want to see if I can get my butterfly spread to start showing some promise. I've got a 59.85, 59.85, 59.95, and 6005. If we're making a run towards this larger gamma level at 6,000, I'd love to see it. So I'll keep an eye on that for the morning. Let's go. All right, taking zip profit. So net on the day, I'll figure out where those closes are, but that is 120. Okay, off we go. Next, copper, lottery trade, Japanese yen, Nikkei. Let's check currency strength for the morning. Interesting mix on the day. Swiss is on top. Holy, weak Aussie and New Zealand. That's really weak on the Aussie. So what the hell? Did they just cut rates? Is that what happened last night? So this week, they did cut rates by 25 basis points. CAD inflation slightly higher. UK inflation is tomorrow. PMI numbers on Thursday. So that's it. Let's go medium and low impact as well. What else is happening today? So they cut CAD CPI, President Trump at 3 p.m. Only president on the economic calendar. Probably some big, bad, beautiful announcement at 3 p.m. I'm curious how the final hour looks today. So let's an interesting segment yesterday. It was Tasty Live, was Tom Sosnoff, Dylan Radigan. Just a lot of stuff going on that basically it's like, well, Trump realizes that if you you know, cause a trade war and put increased prices on everything, people don't like it. So the pivot is, let's not do that. Now we're looking to add to the deficit, add fiscal spending, probably have more fiscal spending than Biden, but you'll never know it because he'll never tell you that. He'll tell you that Biden was the worst president ever and the worst administration, and we're probably going to do the same thing in the same cycle, which is government's going to spend. You can't cut it. Doge is worthless. It was a pointless effort. Elon Musk, lost hundreds of billions of dollars of wealth overnight, and we just have a president that wants to be front and center and front page news every single day. So that's Trump 2.0. It's just going to make for a wild and crazy market, and I think that at the end of the day, the U.S. it's fine. I think there is a global bubble that could be a bubbling and brewing, but these highs could be dramatically higher, like dramatically higher. So I think, if you can't beat them, join them. And it's fun to participate when you've got money to the upside. Okay. All right. Copper. Let's go with Germany. Germany's up to some fresh highs again. FTSE, I mean, UK has been looking pretty good on this comeback as well. Argentina, wow, this thing really screamed up there towards the upside. China's having a good couple of days. Brazil, better above the 200. ILF is Latin America. Nice little push above this 200 moving average. I'm in both of these long. Bought in near the lows around 22 bucks on ILF and bought in around 24 on EWZ for Brazil. So a little bit of the non-US exposure. SCHY is my Eurozone and China exposure, as well as some Chinese stocks. MAGS is still sideways. Another one that kind of looks like, are we gonna hang here? Oops, let me change the color. Are we gonna hang here on MAGS and then go higher? This might be driven by NVIDIA earnings, which are coming up at the end of the month. So that's something to watch for. We also still have this notable gap. So if NVIDIA doesn't just blow out earnings, we might see a bit of a pullback. But if we get into open space and this is heading higher, guess what drags the markets to all-time highs? Probably the Mag 7. The nice thing is we have market breadth that's responding. We've got a lot of stocks above the 50-day moving averages on the S&P and the NASDAQ. But, MAGS, what was once, so hated out of the rotation in 2025, has come back in a nice way. If you like those stocks, which I do, I still like positioning. And I took a lot of positions on all of them this year, mostly just through options and income trades. But I'm still selling calls on the shares that I have of Apple. I did roll my calls down a little bit on Amazon. I'm okay letting some shares go near the highs. And then I'm just adding more, ratio spreads on Amazon. Broadcom, this one I missed. I had a ratio spread when we hit the 200. That worked out well, but I didn't get really any of the upside gain there, which is okay. But Google, nice hold around that 150 handle. I think that's strong support. These are my dollar cost average levels. I'd love to see Google get back to the highs. I did dollar cost average into Google. So my break even is somewhere in here. Okay. If we get greater than 191 and we start filling this gap up here, I'm okay taking profit on my allocation and just go back to trading options on it. Meta, I'd like to see some pullbacks here. Meta. And what? Somebody give me an example of Meta. Like, what the hell happened to their chart? Am I missing something here? Is this there we go. That was weird. The daily chart on TradingView is a little glitchy. There's the weekly. All right. We'll see. Maybe a range trade. Maybe, I mean, this would be great. We had this huge run to the upside. I'd love to see a high, low, lower, high, lower, low. In this current environment, though, I don't know if we're going to get it. This might be just the one pullback that just sends this thing higher. So wishful thinking. If we have a bit of a dip, I might look at some option trades. I like to do some 1-1-1s and, like put condor trades. But yeah, I want to pull back. I was hoping we come back into this 450 to 400 zone. We never got there. Microsoft. Own some shares. It's been working out pretty nicely. I'm looking to take some profit at the all-time highs. Netflix trying to grind out some highs. Nvidia working its way back. My 130 level, I'll keep adding covered calls. Tesla stuck for right now, but I'm just still selling calls. Berkshire Hathaway. Bond market, I'm sure there's some squeeze pressure here in the bond market. I am actively trying to get rid of my TLT positions, actively. Not for losses. Like I'm gonna use options, lower my cost basis, try to get rid of them. But yeah, I'm not looking for anything wild and crazy here. But I think a little squeeze would go a long ways. And I think that the U.S. bond market is potentially the most troubling thing that's happening right now. We basically broke the bond market, or at least made it flinch, and that set everything off. It's like now I think yields are not coming back down. I don't know if that's really going to hurt equities or it's just going to be the same old, which is, well, everything's higher. Yields go higher. It's harder to borrow, but it's still going to balloon asset prices. And it's going to attract more. I mean, it's ideally, if you have higher yields, it's like, is it going to attract foreign investors? Is it going to attract people to buy U.S. debt? The one thing we're wondering is like, will the U.S. debt auction? Will we ever have one that's like abysmal? Will we fail a debt auction, right? And what does that look like for the overall U.S. status? We'll find out. But anyway, I think a squeeze on bonds would be helpful, but just don't hold your breath. We have been in a multi-year drawdown and a multi-year bear market in bonds, and I don't see this getting good anytime soon, especially if we're going to see a safe haven trade on bonds. That means you're going to sacrifice a lot of equities. So I think with equities running hot and probably looking to hit all-time highs, I don't see the bond market doing anything outside of maybe a bit of a squeeze in the short term. Expect to see mortgage rates probably creeping back up towards 7% in the coming months. Currencies, I got about 10 minutes left before I have to go. We've talked about this. This is important. Okay. Everyone's worried about a recession. No longer. Okay. Look, a recession is not going to happen until something shows high levels of inflation trend or high level of unemployment trends. If we have initial jobless claims spiking higher or continued jobless claims spiking higher, which you can see right here in these charts, this prints every single week. Okay. If these are not trending higher, there is no real risk of a U.S. recession. You can throw in all the analogs. You can look at all the historical alignments. It doesn't matter. Okay. I think this market right now could pull back 10%, and it's still a bull market to me, right? I did a video on that. I posted that in the pull alert section for my trading journal. We can still have pullbacks, but if we're not really taking out April lows, this bull market is still in check, and it's just going to offer up a chance to buy. So I hope we get a pullback. It's that simple. Okay. All right. Some China exposure here. Watching Alibaba have some shares. Baidu has earnings this week. I'm going to look to price in a play on earnings. We'll see what the calculations look like. I don't have any covered calls. If we actually get a surge to the upside, that would be good. I hope that we do. Maybe I sell some calls after earnings if it's positive. I do have some puts. I'll still kind of monitor my protection levels. FXI still having some shares looking to get back to highs. JD is at 34. I'm going to sell some calls on this one. Schwab dividend, Schwab growth, those are fine. This one trades a lot like the Qs, is just way cheaper. Less on options, but just as far as buying and holding, it represents the same thing. It's just, if you want to buy something that has 200 tech companies versus the NASDAQ 100, this is a pretty good basket. So that's SCHG, and I bought this thing around 25 bucks. Here's the advanced decline line. 50-day moving average. We're now 78% of stocks are above the 50-day moving average. That's a pretty good sign of market breadth. We are now almost 55% of stocks are back above the 200-day moving average, again showing that there's room to run. Now, as far as a short-term correction, maybe this melt up happens. Okay. Big Les, I think you can tone it down a second. I don't think you really know me to say something like that. I'm certainly more of a trader centrist. I could give two shits about politics, but I can openly say what I want because this is crazy, man. Like politics have never blended into the markets like it is here. We've never had a president on the economic calendar every single week. We've never had a president that feeds off of being front center news every single day. Biden was a dementia puppet, I think our two-party system is the worst. I think government is awful. I think we're running towards a huge fiscal problem. And I'm just trying to trade it. So I think you can tone it down. DXY weakness. Yeah, I'm trading euro dollar long there, soccer boy. Market breadth to the upside. This would be a short-term topping pattern to me. If we start to see that most of the stocks, above the 50-day are reaching like 90+%, at least in the interim, that's probably going to be ventilated a little bit. So, again, I don't like to call tops necessarily, but you can kind of get a sense when like things get a little toppy. Okay. And again, just to point on Big Les, really funny. It's like, how emotional have people been for the last decade in politics? More than ever before, right? Like, look, I say one thing that as a centrist, I can say whatever I want. I could care less about Republicans or Democrats. I think they both suck. They both suck. I hate politics. And I say one thing, it's like, boom, emotion, insults, troll. It's like, why can't we just have a conversation? Can I have an opinion? Can we talk about it rationally? It's funny, man. Like it's so one-sided. You're either all in or you're all out, and there's no in between. But it's funny. Can't we all get along? Yeah, I get it. And you're blaming one party for that? I mean, if you do the research, you'll see that Republicans are just as bad, if not worse. Republicans over a century have added more to the deficit than Democrats. No joke. So they're both as bad. Like we don't have a conservative party anymore. Doge had an idea of cutting $1 to $2 trillion. We cut what, 150 billion? That's just how bloated government is. We're running at 108% debt to GDP anyway. We're running a deficit of 6 to 8% already. And it's just, I think Trump realized like you can't stop that machine without breaking something. And we had a flinch. And that's what April 7th was. Yep. So anyway, enough about that. Let's get some currencies. I got about 5 minutes before I have to go. MDU. What is MDU? Gas distributors. Okay. So is this in utility space? I'll look them up fundamentally. I'll talk about that later today, Daniel. Maybe my 3 p.m. session, we'll take a look at that one. Let me get some currencies. So Aussie CAD, rate cut by the Aussie. So if they get a pullback, I'm still liking this trade in here. If we get a pullback, a swing on the Aussie CAD, Aussie Swiss, pullback. Like I said, this is why I'm patient and I'm not just stacking up a bunch of orders. I still like this trade, coming back in this pocket. I'm still looking to see if we get back to the 200 moving average, but this also may be pulling back for a higher low and then a swing higher. This also might pull back to revisit lows. It's going to be a combination of how much weaker the Aussie gets right now with that rate cut and also how gold plays out. Gold gets weaker, then yeah, I think Aussie Swiss continues to go higher. Yen pairs, I just be careful on the yen as always. Aussie New Zealand also pulling back. I might get the pullback that I want in Aussie New Zealand. I might get my 106, my 103, my 101. This actually would be, I'd be pretty happy if I get an entry here, entry here, entry here, and some inefficiencies along the way. I will load up some Aussie New Zealand longs in a big range trade, but not yet. Aussie dollar. This is why I said wait for a pullback. If you get a pullback into these areas, I think that looks pretty good. Let's see here, CAD, Swiss Aussie or Swiss yen, known Euro Aussie. This is finally starting to pull back. I'm not sure if anybody is, I wanted to get a pullback into here to sell the Euro Aussie. It just kept sliding lower. Looks like we kind of caught a bid off this past, resistance and support zone. So if we got some scalpers, maybe a little pullback on Euro Aussie, but I wouldn't chase it. Euro CAD. Still like stubborn, but I think this is still setting up for a bit of a topping pattern. This could be head and shoulders here. So if we don't break the highs, I think this sets up for a nice reversal pattern. Oil is just so choppy right now. Euro Swiss, still waiting to see how this thing bottoms out. Euro pound robot trading. Euro yen no trade. Euro New Zealand. I mean, if you're brave, maybe looking for a long position here for a short-term trade, I think that'd be more of a risk-off trade if you're long Euro New Zealand or Euro Aussie. Euro dollar, I do like that one right now. I'm up about 80 pips. See if we can get back to the highs at 1500. Pound, same thing here. Get a bit of a squeeze. we'll see. I mean, if you're long like this candle and it holds, there's certainly room to pull back into this swing. So we find this high, maybe pull back a little bit deeper. That would be a scalping opportunity on pound Aussie. Pound CAD, I'd say no trade. Pound Swiss, I'm looking to see if this gets back into 1350. Pound yen, pound New Zealand's, pound dollar, don't love. I'm looking for, I like euro dollar better as far as playing the dollar. New Zealand CAD, I love this trade on New Zealand CAD if we get a pullback towards left structure, somewhere in here for a swing trade. New Zealand Swiss, still waiting to see how this bottom plays out. New Zealand dollar, I'll pull back into this area, be probably 58 to 57. Dollar CAD, garbage. Dollar Swiss, just, I mean, I need to wait for a trend line break or see this thing bottom with some divergence. So if we come back down to some lows, does it hold the lows? Does it go slightly lower with divergence? Do we put a bottoming pattern in? Right side of the trend line to me is the much better trade. So waiting to see how that plays out. Okay. All right. And then lastly, dollar yen. You had a chance to buy this thing low and take it up for 800 pips. Now I'm out of the dollar yen. Like, what do you do here? Nothing. You know, maybe a hold at these lows, but right in the middle. So, you know, if you're watching closely, maybe a trend line break here, maybe a pop back up, but you got to get some confirmation before you take that trade. All right, that's it. I got a hard stop at 11. I do have to go. I'll be on a little bit longer tomorrow, but a little bit of top-down stuff. Markets have turned red on the morning, so we are down about 0.4% in the SPX. We're actually dropping pretty aggressively here these last couple of minutes. So nice thing is this morning took a winner out of some chop and took a winner out of some direction. And now the market can do whatever it wants. My day is kind of concluded. I'm just kind of monitoring and see what happens. This might still be a chop fest this morning. I don't really see any levels growing to the downside. So I'm not looking at like levels to the downside. Let me see if anything's growing. I do see that 59.30 SPX swelling a little bit. So anyway, we'll see if it's just a chop fest today. It might be. Might kind of hang out for the day. So, all right, I'll let you go. Thanks for being with us today. And sorry for the early departure, but I'll be back tomorrow. All right, thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.